Hello and welcome back to Robinhood Stock Market Watch List Group Meeting. Today is February 13th on Sunday, and this is our live meeting that we do every week. And just want to kind of go over, we always go over some kind of educational information in the beginning of our meetings, and then we'll kind of look ahead to see what type of events are scheduled to happen. Now, there's always going to be some surprises or manipulation, or but at least these are some things that we can be prepared for as we plan our trades, and then we will trade our plan. So that is the goal. But first, let's talk a little bit about some little bit of education. And I wanted to kind of go over the stock market calendar, which is extremely important, again, as we try to plan ahead, whether it be a week or a month or for the year. Always having a stock market calendar is extremely important to have under your tool belt. And so, and you can go to Google, you can type in stock market calendar, maybe even PDF, because that's what we're looking for. But if you type in Nasdaq stock market calendar in the Google search bar, just kind of scroll down until you see the PDF right there, and then we'll click on that. And then this is where we will see our 2022 calendar. So we'll see the trading days on the left side, and that's Monday, Tuesday, Wednesday, Thursday, and Friday. The grayed out areas, that is the weekend, obviously. So we're mostly focused in on what's happening in the month. And so right now we're in February. It's the 13th. So we're right here on the Sunday. So then we can kind of see if there's anything scheduled to happen. So we got a little green circle. So you just got to kind of go down here and see what exactly that green circle is. Now, I primarily look for, as a like a pro trader or investor, I mostly look for either like holidays, which is coming up. We have one not this coming week, but the week after. That's going to be the President's Day. So that is going to be closed. And so if it's an orange circle that's not filled in, that just means it's an early close. So, but either one, a holiday week usually indicates a very low volume, very low activity, usually bearish characteristics, because a lot of investors will just take that week off. They're on a holiday, or you're on vacation, or whatever, and so they'll just stay out. And so having a holiday week can be very very interesting. Now, the other thing that I'm looking for too is what's called triple witch, or triple witching day, which happens only 4 times a year. So it's a very rare event, very volatile event, and it's usually a very bearish event. These events usually happen at the third Friday at the last month of every quarter. And so that would be March. So we have March coming up soon. So this is just kind of a pre-warning, letting you guys know, as we're wanting to talk more about the stock market calendar. The March 18th is the third Friday of the first quarter, that at the end of the first quarter. And so that is going to be extremely bearish. And it says expiration of equities, options, and that's where a lot of things like expire. It's a trifecta of a lot of bearish characteristics. And so it's kind of a double whammy, and so there's a lot of volatility that day. But like I said, it's very bearish, but it's good to know, because if you can plan and you can bet against stocks, because a majority of the entire stock market system is going to be down that day. So you can always plan ahead. But also it means that this is now the end of the winter season. The winter season is the most bearish season of the year, where the bearish season, which is what we're in the middle of, is normally we'll see the mornings open up in the red and close in the red, or maybe if it opens up in the green, it's going to close in the red. Once we get past this point, we're entering the spring season, or the second quarter. One of the reasons why the first quarter is so bearish is because we go over a lot of economic reports that will be yearly. There's a lot of earnings that we go over, not just for the fourth quarter, but a lot of these earnings, they'll talk about their yearly revenue and their earnings. And so it just creates extra volatility because investors and the guys at Wall Street get extra spooked. And so we're seeing much bigger swings. But once we kind of get out of this first quarter, now all that yearly stuff is done. So now we can begin to look ahead for investors to start buying in stocks to hold for the rest of the year, or long term, or short term, or whatever. But that's basically where we're seeing a transition of bearish characteristics into bullish characteristics. So now we're either seeing a 50-50, open in the green, close in the red, or open in the green, close in the green. And so we'll see more of that transition of bearish to bullish characteristics through April, May, and June. And then we have the triple witching day again on June. But once we can kind of get over that bearish day, and then we see, it looks like on the 20th is a holiday. So then we just kind of have to go through a holiday week of a very low volume and activity. But then we get through that month, and then we're entering the third season, or the summer season, which is the most bullish season of the year, where a majority of the time the stock market opens up in the green and it ends in the green. Very rarely are we going to see it open in the red or close in the red. And so this is a normal algorithm, a yearly algorithm for the stock market. It happens just like this all the time. And that's why it's really important to have a calendar. You can download it, you can print it out, but like I said, it's a very useful tool. That way it can kind of remind you of certain things that are going to happen. That way you can be prepared. So let me see, there might be some questions in the chat room here. Let me see, what will happen next week when Russia will take over Ukraine? So Mike, which is a very good question that we're all thinking of Russia, Ukraine, and whatnot. We don't know if this is just muscle flexing or manipulation or whatnot. Now, we do have to make sure that we are aware, first off, that the Russian people don't agree with any of this. The Russians don't like Putin just as much as we don't like Joe Biden. Americans would be doing things completely different, just as the Russian people would do things completely different. So Putin is really the aggressor. He's the invader. He's the manipulator. But what if, the whole world is in on this? I mean, there's a lot of interesting things that, can kind of play out, because it all has to do with, oil, energy. Putin wants to install a bunch of oil pipelines through Europe. Europe is running out of oil. And so if they can install pipelines, because Russia has a lot of land, a lot of territory, there's a lot of resources, they got a lot of oil there, and they need to install pipelines throughout Europe, so that way Europe can try to thrive again, because they're it's not looking good here in the near future. So they could all be in cahoots, and Ukraine is, when we look at the history, let's say like the 17th century, with Russia used to be a very small country. Over time, they've really expanded out towards the east, But the Ukraine used to belong to the Ottoman Empire, and for some reason they had sold their country to Russia, and it seemed like it was fair and square, just like we bought Alaska from the Russians, or how we bought Florida from Spain. And so they bought it fair and square, and if you think about what it would be like growing up in a country that had owned that territory the whole time, and then all of a sudden, it was separated in the 1980s or whatever. I mean, in our lifetime, and so he may want it because maybe it belongs to that country, but also it's very, very suspicious too, at the same time, that he's also wanting to install these oil pipelines, and a majority of the world needs this to happen. So I mean, it's like, what if they're all in cahoots, and they want to see this happen, but they want to make sure that it's not going to go beyond what it's supposed to. And so I mean, Ukraine just they just don't like Putin, and or just that whole situation. They don't want pipelines through their country, and whatnot. So but at the same time, China and Putin are very close to each other, and they're doing a lot of partnerships, especially with their space programs, and military programs, and whatnot. And so the China has the Olympics going on, so a lot of analysts believe that Putin may want to wait until after the Olympics. Now, the Olympics end on Sunday the 20th, so we're only 1 week away, exactly. And so it could happen at any time, but it's still mostly though, it's unlikely it's going to happen at all, because at a military strategic standpoint, if you're going to invade, you need to do it fast. You need to do it soon, because the longer you wait, the more it's a disadvantage for Putin, because it allows his opponent to become more prepared. And so that is where a lot of the military enthusiasts just don't believe that this is going to happen. But yeah, I mean, they're sending moving troops and stuff around, and or beefing areas up a little bit. But it just doesn't, it's unlikely that it's going to happen. This is just most likely market manipulation. Now, market manipulation can really, I mean, it can help out a lot for the world markets, because the whole world markets can dip, even though that may seem like a bad thing. However, bad news can be great news. It all depends on how you utilize the information, for your benefit. And so with stock options, we can bet against stocks, or we can bet stocks can go up or down, and with a tremendous amount of leverage. And with this kind of volatility, that is one of the reasons why I always highly recommend straddling. Straddling is when you bet both the stock goes up and down, because you can only lose what you have on one side, but your gains are potentially unlimited on the other side. And so that kind of leads us into going into this week. That way we can see what stocks are going to be on the news, because one of the things, us pro traders have an old saying that says, buy on rumor, sell on news, because the idea is to own the stock or the option before it's on the news, because that's the time to sell, when all the volatility is in your favor. And so but one of the important things, other than international news and drama, can really have a major effect on the entire stock market system. But it is very unexpected when that can happen. But obviously we are expecting it to happen, just not sure what day. But the whole week can easily be very, very bearish. But there's just a lot of events that are scheduled to happen that we're going to talk about that could also play a good influence on our stock market. Now, the next big thing that has a major impact on our stock market system is economic reports. So it's always really important that we go over the scheduled economic reports for this week. And so the best place that is very user-friendly is a website and an application called investing.com. If you go to investing.com, there's just some calendars here on the top right area, and just click on the economic calendar. If you're on your mobile application, it's there's a little calendar icon on the bottom of the screen. You just click on that, and then there's a little drop menu on the top of the screen. You just click on that and then change it to the economic calendar. Once we're here, there's a little filters icon here, or if you're on the app, it'll look like a little funnel. Click on that because we need to clear everything. There's only two things that we need to see, and that's the United States. So put a check mark under the United States, and then under importance, you'll see a 1 star, 2 stars, and a 3 stars. We want to put a check mark under the 3 stars because what we're wanting to pull is all of the United States stock market information that'll have the biggest impact on it. So once you have those two selected, click apply, and then it will then populate that information. Then we'll have to click on this week to see what is scheduled to happen before it happens. And so Monday, obviously there isn't anything major scheduled to happen Monday. As Monday comes, it will kind of be determined between the investors and the news and other activity that may carry over. And a lot of times we'll see a very low amount of volume on Fridays. Usually there's usually a little sell-off anyways right before the market closes, because a lot of times investors don't like to hold over the weekend because a lot of things can happen over the weekend. You have 2 days of activities, especially around the world, that can happen. And investors, one of the biggest things on their mind is, what if Russia or Putin does invade Ukraine over the weekend? That could create a very catastrophic drop in the stock market system. We could potentially even see what's called tripping the circuit breaker, which we could see more halts and whatnot happen with the stock market. But hopefully not. If this is just manipulation, I would anticipate this could extend out through the triple witching. If they're trying to, a lot of times the politicians and a lot of these people will use these seasonal characteristics for their advantage. And so if it's the bearish season, they could easily pour more fuel on the fire, making it more bearish. And so we have to remember, sometimes you can't bullshit a bullshitter. And so if there's some kind of weird activity going on, we have to be very open-minded and be aware. But anyways, so Monday, it's to be determined. We don't know yet if it's going to be bearish or bullish, because there's just a lot of fear going on right now. So we'll have to see what the U.S. futures look like that day, so or later on tonight. And so we'll have to watch that. Now on Tuesday, though, we have the Ppi report. This is a month over month for the month of January. Now, if we're seeing more yearly economic reports, that is going to have the biggest impact on the stock market. If we're looking at a quarterly economic report, it's going to have almost as big of an impact as a yearly one. If we're looking at a monthly one, that also has a pretty big impact on the stock market, but just not as big as the other rare ones. But if we're looking at like a weekly one, those will also have a pretty decent impact on the stock market, but not as much as a monthly or a quarterly or a yearly one. Now Tuesday, this is a fairly rare one. It's a monthly one, and when we're looking at on the website, this is going to be in the Eastern time zone. So if you're looking at on your app on your phone or your tablet, it's going to be based on your time zone. So you have to make sure that you are very fluent in with the market hours, with different time zones and stuff. So basically 8:30, since the stock market opens in Eastern time at 9:30, this is telling us that this report is scheduled to be released 1 hour before the stock market opens. That means it's going to affect the pre-market. It will make the pre-market more volatile, which is one of the ingredients we need for certain strategies, and particularly straddling. Because if we buy both calls and puts on something like SPY or Apple, maybe 5 minutes before closing on Monday, this will provide a very good amount of volatility that we need for the opening on Tuesday, whether it be bearish or bullish. In either direction, it will become very profitable because you only need a small movement for a straddling strategy to become profitable. And so, but if you're not sure what these are, you can click on it. And when you click on it, a new tab or a page will appear, and it will provide you a little bit of information on what the PPI is, which is the producer price index that measures the change in the price of goods sold by manufacturers. It is a leading indicator of consumer price inflation, which accounts for the majority of the overall inflation. This paragraph here will explain if it's basically how to kind of absorb that information. Basically, like a higher than expected reading should be taken as a positive or bullish for the US dollar or the stock market system, basically, while a lower than expected reading should be taken as a negative or bearish for the US dollar or the stock market. And so most of the time, these numbers need to be higher, but there are a few that need to be lower. Like the crude oil inventory levels are the barrel of oil, and so if those numbers are lower, that means people are driving, they're spending money, they're going on vacations, they're doing stuff, and that's great for the economy. Same thing with the unemployment, which is the initial jobless claims. The lower that number is, that means the more people are working and making money and spending money and also paying taxes, which is great for the economy. But again, most of these things need to be up higher. So, but going back to Tuesday with the PPI report for the month over month of January, the previous report for December was 0.3%. Now, it's anticipated that it's going to be a little higher than that at 0.5%. So as long as it can meet or beat the previous report, we will be fine. If it can meet or beat the forecast report, we're even better. However, if it's lower than the previous report, be prepared for bearish characteristics. Now, at this time, exactly is when the report is released, and you're receiving it the same time the news companies are. Now, the disadvantage of getting this information from the news is that they're getting it. They have to take time to create an article. They have to type it all out. Then they got to maybe put a picture in there or something. Then they blast it out, and it takes time for that to happen. You could end up getting the news notification 30 minutes later or hours later, and by that time it's too late. We have to know what's going on at the time it happens, and this is the best way to receive this information. That way, as soon as you get it, now you can base your strategies on what's going to happen. Like, for example, so let's say if it does meet or beat the forecast, that means basically we should expect a very good opening for a pre-market, and the rest of the day could easily be very bullish. So we could see the Tuesday close in the green, not only open in the green, but it can close in the green, because like I said, this is a strong economic report that we're looking for volatility. However, if the actual report comes back and it's a lot lower, like 0.1 or something, then especially if the pre-market is green, it's most likely it's going to turn red at opening, and the rest of the day could easily be in the red and close in the red. And so, unless, depending on what's scheduled to happen on Wednesday, people could really buy in right before close, and we could see Tuesday close in the green. So that's why it's just really, really important to really pay attention to what's happening before the news companies start posting it. Because like I said, time is money. Time is very, very valuable, and every second counts because the stuff is time sensitive. And so Wednesday, we have 2 more economic reports that are scheduled to be reported 1 hour before the stock market opens. So we got another great morning of a lot of volatility during pre-market, which is great for straddling our stock options, both calls and puts. So we have 2 basically retail sales for the month of January. Both are very similar, but a little different. Meaning where I think one may be more in like services and whatnot, or one maybe excluding automobiles where the other one isn't. And so, but both basically kind of get the idea, is sales in general. And now the previous report, which is very interesting, that December retail sales were down because December retail sales are usually up because that's the Christmas holidays. People shop, people spend a lot of money on things. However, there was a shortage. There was a shortage on all kinds of stuff and materials for manufacturers to produce things. And so if there's not enough of things for people to buy, they're just not going to naturally, buy things. So overall, retail sales were down due to the shortage for the month of December. However, it's anticipated that the number is going to bounce up, and I believe that because the December was a big drop. And normally when you see a big drop in any of these economic reports, and that's why it's one of the very important to look at this stuff regularly. And I've been looking at this stuff for years, and you just kind of memorize the things that happen, just like December that we're talking about. I remember it very clearly. But anytime you see a big surge or a big plunge in something, usually it'll bounce off of that on the next report. And so I would definitely consider this was a big plunge. This was a huge decrease. So I would definitely expect a bounce up from that. And whether the reports come back this high or not, as long as it's much higher than this, which I'd say that there's a 90% chance that it's going to be a lot higher than the previous reports, we're good. We should still see bullish characteristics. If we can meet or beat the forecast, we're even better. It's game on. We're in bull mode for Wednesday. And that's where I'm thinking, depending on what happens during pre-market Tuesday, I'm still thinking Tuesday we could see a very green close, because I'm thinking that the investors and traders are going to be very optimistic for Wednesday morning, unless it's interfered or manipulated by other world events. This looks very clear that that this information or this characteristics should be very bullish for the most part. Now, for the crude oil inventories, we have this report is scheduled to be reported 1 hour after the stock market opens. So you can kind of see what's going on here. It's like they almost planned this schedule perfectly. So we get a good amount of volatility during pre-market, and then we got opening, and then the first hour and the last hour are always the most volatile times of the day. So we have the first hour is going to be the most volatile part of the day, and then we have after the first hour, they throw in this economic report, just basically pouring more fuel in the fire, making it more volatile, and so keeping the momentum going for Wednesday. And so, however, again, crude oil is one of those numbers we need down. If it's the lower the number, even if it's in the negatives, that's bullish. However, this number was extremely low last week. And so that means there should be a bounce. So it will bounce off of that, and it should be higher. And so if we open up, we do very well Wednesday morning, very bullish. And most likely it's going to be interfered with the crude oil inventory report level, is now going to introduce bearish characteristics. And then we have the FOMC meeting, which will also provide more bearish characteristics. So Wednesday, it will most likely, it's going to close in the red. So basically the government has these little meetings where they like to talk about inflation, they like to talk about interest rates and whatnot. And now it may not have bothered the stock market much last year because it was just all talk, but now they're not just talking, they're doing. They're wanting to increase interest rates very rapidly. And so that is that introduces a lot of bearish characteristics for the majority of the stock market. But not only does the stock market have a yearly algorithm and yearly seasons, but the stock market also has a 10-year algorithm where after 10 years, we usually see a major correction, like, the COVID manipulation. We had the the one before that was the financial collapse, in 2008. The one before that was the Twin Towers, and then you had whatever happened in the 90s and the 80s and the 70s, and it just goes on and on and on. So the 10-year algorithm also has particular seasons. Now, we just got out of a 2-year technology season. We are now entering a bank and energy season. So because the interest rates are very low now, the government's going to start increasing interest rates more and more every year for the next couple of years. And so the banks are going to profit tremendously from this. And that is why we're seeing a lot of unusual buying activity on Bank of America and JP Morgan Chase and other banks. Because not only are you holding on to a appreciating asset, but these stocks, a lot of them are going to pay dividends. So they're going to pay you dividends every 3 months. And so and every 2 years, it's like there's a new season. Every segment of the stock market has their time to shine, and then the next one has its turn, and then the next one has its turn, and then it recycles itself back from the beginning. It's just a very weird, but hey, that's just the nature of the game. Don't hate the player, hate the game. It's just the rules. It's just how it works. But as long as you know how things work, you can be a much better player at it. And so that's why it's just really important that because the more you learn, the more you're going to earn. You'll thrive. You'll just like if it's a board game playing Monopoly. You're not going to be able to do very well playing Monopoly if you don't know the rules and how things work. And so that's why we got to start from the top. What makes the stock market tick? What makes it move? What makes it very volatile? And this is it. So Thursday, we have the building permits and the unemployment report and the Philadelphia Fed Manufacturing Index all at the same time, 1 hour before the stock market opens. So we got a good kickstart for a pre-market 3 days in a row. That is awesome. And that's what we want to see, because last week was very, very light. But this week looks much better. So building permits, we had the previous report at 1.885, which was that was pretty decent. But we're expecting things to slow down a little bit. So as long as it can meet or beat the forecast, we should be fine. If it can meet or beat the previous report, we're even better. And so this is, we'll see what it comes back. It's hard to say because it could easily be around that. I have a feeling, which you don't really want to go off of feelings. You want to try to go off the statistics and whatnot. But I have a feeling that the number could be a little lower. So, but it should be right around that. So it just to be determined. We just got to wait to see, what happens there. And then unemployment report has been kind of hovering. I would say this is still kind of high, 223. We should start to see this, come down, some more. So we may see some mixed signals of good news and bad news on Thursday. So we'll just kind of have to wait and see what happens and how the stock market may take that, because one of them may be more dominant, and it'd probably be more of the building permit because it is a monthly report, where the unemployment report is a weekly report. So this one will probably have the biggest impact on the stock markets. We'll have to see, we'll have to focus on that one, the most. And then we have Friday for the existing home sales. This is basically like used houses and whatnot. So this is scheduled to be reported 30 minutes after the stock market opens Friday morning. However, the previous report for December was 6.18 million. And so the real estate had been great in this last year, up until the end of the fourth quarter. And the reason why that is, I don't know if any of you guys are in real estate or familiar with that, is because a lot of people want to buy and get into their house before the holidays, before Thanksgiving, and definitely before the Christmas. And so after that, usually you kind of see things kind of taper down a little bit. So we'll have to kind of see, what it looks like, but it can easily be a lot less than this. And so we'll just have to see, because if it is, the Friday is going to be extra bearish. Because again, investors don't like holding over the weekend. So there's going to be a sell-off. And especially with the Olympics ending on Sunday that weekend, there's going to be a massive amount of fear with Wall Street and investors if Putin hasn't invaded Ukraine by then. And I'm sure that this is exactly how it's going to play out. Where it's not going to look good. So be prepared. And one of the things that's important to the reason why to straddle is because things can change. There could be a 180 where all of a sudden, just from a phone call or whatever, Vladimir or Putin can, or somebody or the politicians can basically had worked something out, and this is all. This could all end really quick, and then all of a sudden the stock market will surge, and then everybody has puts, which will now almost be worthless. And that's why it's important to straddle both calls and puts at the same time, because manipulation can be very volatile. And like I said, you can easily lose 100% on one side, but on the other side has the potential to provide an unlimited amount of gains. You can end up gaining 200%, 500%, 4,000%. So this week looks very, very volatile, very, very volatile. So this is going to be an amazing week. That way we can make a lot of money. And so the next important thing that we need to go over is earning reports, because this scheduled earning report looks amazing. Just like the last several weeks, we're going to see a lot more stocks plunge, or maybe even surge 20-30%. So we got to be prepared. Now I post, and since I've created this group 4 or 5 years ago, all my posts are saved what used to be called the announcement area. Now it's Facebook renamed it, so it's considered the featured area. Now every Saturday I post from Earnings Whispers the this week's scheduled economic reports. So we have this week scheduled. We have Monday, Tuesday, Wednesday, Thursday, Friday. We have before open. We got after close, and then we can see the top 10 highly most anticipated release earnings, which is basically going to be Nvidia, Palantir Technologies, Shopify, Roblox, Upstart, Roku, The Trade Desk, DraftKings, Walmart, and Airbnb. Now, usually on either Saturday or Sunday morning, I will also post the top 10s analysis on here. So where Airbnb is confirmed to release their earnings on Tuesday after close, the company's earning release has a 55% expecting an earnings beat, which is not good. However, option traders are pricing in around a 10% movement in either direction, which is great for straddling. Especially if you can get over a 10% movement, 15, 20, 30%, that's even better, because you might not know exactly which direction that it's going to go. But if you can bet both calls and puts, you can potentially do quite a bit on one side that can wash out the loss on the other side. And even though you could buy these at the same time before the stock market closes, you can also sell your calls and puts at different times in the morning, maximizing your gains and minimizing your loss on the other side. Now, Walmart is also expected to release their earnings Thursday morning before the stock market opens. The company earning release has only a 59% expecting an earnings beat. Now, average earning percentages beat is around 65%. So any less than 65% is considered below average, or if it's below, or if it's above 65%, then we want to consider that above average. However, Walmart, even though they're expecting a 59% expecting an earnings beat, option traders are pricing in around a 4.5% movement, which usually Walmart doesn't move very much anyways. They usually move around 2%. It's not a really big mover. So even though it may be on the news, it's not really going to be a major player for this week. However, then we have DraftKings, kind of a cool picture there, huh? DraftKings is expected to release their earnings Friday morning before the stock market opens. The company earnings release has a 62% expecting an earnings beat, very close to average. However, option traders are pricing in almost a 15% price movement on the stock in either direction, which is a perfect ingredient for straddling. That's what we're looking for. Again, anything like between, or anything that's really over 10% is even better. 15%, because sometimes it can go even more. And so this is definitely, we may see even some unusual straddling activity before the earning release is out. And so we got to pay attention for anything flying underneath the radar. So Trade Desk is also confirmed to release their earnings report on Wednesday morning before the stock market opens. The company's earning release has a 77% expecting an earnings beat, which is definitely considered above average. Option traders are pricing in almost an 18% price movement on this. However, in the past, it's had some pretty good movement. And so this is definitely something investors are going to be keeping a close eye on. So we definitely need to put that one on our watch list as well. Next one is Roku. Roku is very, very popular, very common. Most of the time, they're built into the TVs for their user interface and their operating system. But it's a very powerful software, and they do a lot of advertising in there, as well as a lot of the apps that pay Roku to have their app on their platform. However, Roku is confirmed to release their earnings on Thursday after the stock market closes. The company's earnings release has a 69% expecting an earnings beat. However, traders are pricing in around a 15% price movement. In the past, it's had some decent movement, but nothing like now. And the reason why, again, this is so volatile is because we're in the first quarter. Again, we just like the economic reports, not only do we talk about the quarterly information, but they're going to talk about the yearly information too, and that is what's going to pour fuel on the fire, making it more bullish or more bearish. And so Upstart is also confirmed to release their earnings on Tuesday after the stock market closes. The company earning release has a 73% expecting an earnings beat, which is pretty good. And however, option traders are pricing in around a 25% price movement. That's the highest price movement we've seen that we're going to see throughout this top 10. And so I think we're going to see a lot of investors we're going to probably see a lot of straddling on this one, because this is going to be a big mover and most likely in the upward direction. Now, 73% are, that's almost like, 3 out of 4 odds. So that just depends on you and your strategy. If you want to go all calls, that's fine, but that's only one direction. And if you buy all calls, betting that's just going to go up. And if it does, I mean, that's going to be huge. But you're still risking, a 27% chance, 1 out of 4 odds that it is not going to go up, and that it could go down, and you could potentially lose quite a bit. And so versus betting both directions, you may not gain as much, betting one direction, but if it does go the other direction and it goes 25%, you're still going to gain a very hefty amount. And you'll be glad that you did it that way. And so that's why, you just got to be very careful. And just, it just depends on your strategy and yourself of what you want to do. But the safe plays are usually in straddling. And you usually, when you do that, you always want to buy at the money or within the money, because it just maintains its value more with less time depreciation and time decay. Now, Roblox is also scheduled to release their earnings on Tuesday after the stock market closes. The company's earning release has a 63% expecting an earnings beat, and traders are pricing in around an 18% price movement. Now, in the past, it's had some pretty big swings as well, so there's going to be a lot of activity on this one, so be sure to put this one on our watch list as well. Shopify also expected to release their earnings, but on Wednesday morning before the stock market opens. The company earnings release has a 62% expecting an earnings beat, where traders are pricing in around 12 to 13% price movement, where in the past they've had around a 5 to 6% movement, but a little extra volatility this time with Shopify. Next one is the Palantir Technologies. They are scheduled to release their earnings on Thursday morning before the stock market opens. The company earning release has a 65% expecting an earnings beat, when the traders are pricing in around a 13% price movement, or in the past they've done around 10% in either direction. And so, but 13%, that is definitely pretty good. Last but not least, Nvidia is definitely going to get a lot of attention this week. Nvidia is scheduled to release their earnings report Wednesday after the stock market closes. The company's earning release has an 85% expecting an earnings beat, which is the highest percentage of any company that's scheduled to release their earnings this week that will beat their earnings. That is a great percentage. That's like 5 out of 6 odds it's going to beat its earnings. 1 out of 6 that it's not going to be in your favor, and it could go in the other direction. However, option traders are pricing in around 10 to 11% price movement, where in the past it never really moved that much. 3 to 4%, but we're going to see extra volatility, because not only are they going to talk about the fourth quarter information, but they'll also talk about last year's information or and whatnot. So we're going to see a lot of big movements, and a lot of these may take other stocks along with it, or maybe it could have the opposite effect, like AMD and other, or like Intel and whatnot. If Nvidia does well, the other ones we could see a good increase on those, as well as unusual activity. And so these are the top 10 most highly anticipated release earnings. So definitely make sure you put those on your watch list, and as well as maybe downloading a little image, put it on your little photo album. That way you can always have that for your reference. Now, the investing.com always provides some very good news information, and every Sunday morning they always post the top 5 things to watch in the markets this week. And as we go through our little due diligence looking for activity for this week, we always want to refer to this to make sure we didn't miss anything, because we do a very thorough job with looking ahead to see what's scheduled to happen. So investing.com basically is saying the geopolitical tensions, which is something we've talked about with Russia and everything. So they're saying Wall Street's 3 main indexes closed sharply lower on Friday after the White House warned that the Russian attack on Ukraine could begin any day, while stocks got hit. Prices for treasuries, the dollar, and the other safe haven assets such as gold rose. As well as the oil. Crude prices also surged as the prospect of sanctions on Russia, a top producer, added to fear over already tight global supplies. Some analysts believe soaring crude prices could exacerbate already high inflation, adding a pressure on the Fed to raise rates more aggressively. By pushing energy prices even higher, a Russian invasion would likely accelerate inflation and redouble pressure on the Fed to raise interest rates, said Bill Adams, chief economist for Commercial Bank, in a note cited by Reuters. From the Fed's perspective, the inflationary effects of the Russian invasion and higher energy prices would likely outweigh the stock's negative implications for global growth, he said. Number two was the Fed Minutes speaker, which is something that we also had talked about with the Fed meeting, which was on Wednesday. With markets already pricing in a strong chance the Fed will hike rates by 0.5% point at its upcoming March meeting. Wednesday minutes from the Fed's January meeting will be scrutinized for any indication on how big a move officials are contemplation or whatever. So basically, for the longest time, the Feds have always been telling us that the interest rates are going to go up 0.25% at a time, and that they wanted to do it only 2 times a year for the next couple of years, and then they'll figure it out after that. Well, now you get so many other politicians. We got to start doing this more. We need to do it fast. We got to do it 4 times a year for 4 years. We, instead of 0.25%, we need to do 0.5%. And so they're trying to compromise, and they're trying to meet in the middle. And then they said that, oh, now let's do it 3 times a year for the next 2 years, and we'll stick with 0.25%. And then you got more, and then so the more and more they go through these meetings, it's like the other opponents are getting their way, and so now it's really anticipated that they're going to agree on 0.5% at a time for the next few years, and that could easily lower inflation, because people aren't going to, but it's also going to lower the values of vehicles. It could also lower the value of homes, because people aren't going to be buying as much, but we could also see maybe a little surge of people buying vehicles and buying homes before the government starts increasing interest rates. So this will be very, very interesting. But once the interest rates are high, we could easily see the values and inflation come down. When inflation comes down, then a majority of stocks are going to come down, because it's just the overall value of things. And so but yeah, so last month the Fed chair Jerome Powell flagged a March liftoff and said that there was quite a bit of room to raise interest rates without threatening the recovery in the labor market. On Friday, Goldman Sachs said it now expects 0.25% points rate hikes this year, up from its previous forecast of 5, as it updated its forecast following Thursday U.S. CPI data. So it's like they're just increasing it more and more, and it's just making but at the same time, if this invasion does happen, with Putin invading Ukraine, it will definitely create energy prices to surge. Definitely the barrel of oil will exceed over $100. It's not far from it now, but we'll probably see a barrel of oil get to $120. The gas prices and diesel prices will go up. Even though the interest rates go up, they're supposed to lower inflation. But if the price of gas and diesel go up, the price of shipping of our goods go up, and that means our daily items that we normally buy on a daily basis are going to go up. Our shampoo we buy, the produce we buy, the food we buy, everything that costs money to ship is going to go up. And so hopefully that doesn't happen. Hopefully this is just a big manipulating thing, creating bearish characteristics that we can buy in low and buying the volatility. And hopefully as we go through March and get through the triple witching day, we'll see a much brighter future and recovery for our economy. And so several Fed speakers are due to, or officials are due to make appearances this week that will also be closely watched by many different people here. And so last Thursday, we had the Billard said, in the light of the latest CPI reading, he now wants a full percentage point of interest rate hikes over the next 3 Fed meetings. So that's nuts. That's too much too quick. And so number three is the United States economic data. Markets will get an additional update on the inflation picture with Tuesday's release of the producer price inflation, or the PPI figures that we were talking about, which are expected to remain elevated. So meaning where they're not really expected it to be, to move much. It should stay kind of where it's at. So soaring inflation has seen consumer sentiment deteriorate. So Wednesday's data on retail sales will also be in focus this week. Retail sales are expected to have risen 1.8% last month, boosted by higher auto sales. And again, that's what we were talking about. Remember, when there was a big plunge or big surge, usually there's a big bounce. In this case, it had plunged, and so there should be a bounce upwards. So the economic calendar features reports on the industrial production, the initial jobless claims, which is the unemployment report, the existing homes, which is the used homes, building permits, and housing starts. Number four, earnings, which we've talked about. Earnings season is drawing to a close as we're getting through a lot of the big market capital companies. But this week we'll see another big flurry of notable reports such as Airbnb, Nvidia, Cisco, Walmart, known for its everyday low prices, reports on Thursday and is better positioned than other retailers to withstand rising price pressures. The pandemic has triggered inflation across the supply chain from labor to raw materials, forcing companies to pass higher prices onto consumers. However, many companies could still not fully offset the impact, and that hit their profits. And then we have the John Deere Company, the world's largest maker of farm equipment, reports on Friday. Now, the number five, last but not least, is the United Kingdom data. It's packed week of United Kingdom economic calendar with the latest jobs figures out on Tuesday, inflation data on Wednesday, and retail sales on Friday. So these won't have as big of an impact on our stock market like our reports, but it will have a pretty big impact on the United Kingdom stock market, which can have a little bit of effect on ours. So that's why it's always good and important to watch other world markets too, to see kind of what if there's any big movements going on their end, because like I said, sometimes that can kind of bleed over into other world markets. So but yeah, so this is so it looks like we basically covered a lot of the most important stuff there. Let's take a look at some Friday's activities. So we always like to go to like varchart.com. Under options, we'll take a look at Friday's options activity. So we'll go to most active options, looking at the overall options system. So, and this stuff updates about every 15 minutes when the stock market is open, but this is basically information at right when it closed. So Friday, right at close, Apple had dominated the options activity with 1.1 million in options volume, where Tesla was number one at 1.0 million in options volume, which this is normal. Apple is usually dominates the top of the list because it's the more favorable stock option to day trade and to swing trade. It doesn't move very much. Usually it moves 1%, maybe 2 or 3 at most. When you're looking at its graphs and charts, it's very predictable. It moves very smooth, unlike a penny stock that can quickly surge up like a rocket or plunge down like it's fallen off a cliff. And so Apple doesn't do that. It just moves very precisely, making very predictable. And so that's why it's usually the number one on the list. But when we look at this list regularly, we can see what's normally on here and what's not normally on here. So when you usually see something that's not normally on here, we can kind of consider that unusual activity. Like, for example, Nvidia is not normally on the top of this list. If any, it's usually on the bottom of this list or maybe down below, but never usually on the top, unless there's something flying underneath the radar. Something may soon to happen, just like what we've been talking about that's scheduled to happen this week, like its earnings. And so there may be a lot of people that are buying, because out of this amount of options volume, 57% are buying calls, betting that the stock's going to go up either that day or most likely on Monday or the next trading day, or maybe later on this week. And so this is where we can kind of pick up some of these flying underneath the radar type of, because this is what this is. This is our radar. We just have to be able to understand what we're looking at and what we're seeing. We have the ticker name over here. We have the company name, the last price. This is the share price. And when the stock market is active, this stuff changes every single second. The change is basically the change for that current day. So it's Friday. So Apple was basically down $3.48 or down 2%. But it's just really great information, because sometimes you can find a lot of things or unusual activity. Maybe you have a higher percentage on a call or a higher percentage on a put dominating that a lot of people are betting against the stock, like Cleveland Cliffs were down 10% out of this amount of volume, when Cleveland Cliffs is never on this list. They just had earnings last weekend, and so I don't recall if they had beat or met their earnings, but sometimes we'll see a lot of stocks that they'll beat their earnings and the stock still plunges. Well, that still means a great buying opportunity. So you still have a lot of people. 75% of these investors are betting the stock goes up. So we can go a step further. If we click on option volume leaders, now we can see the most highly active individual calls and puts. So that gives us the ticker name, the current share price, but we have the put and call type. So the put is betting against the stock, betting the stock is going to go down, or the put is betting the stock goes up. But we have to make sure when we're looking at this on a Friday, Saturday, or a Sunday, we need to make sure we're looking at the DTE, which is the number of days until the option expires. Because if it's already expired, it's already passed, it's no longer valid. We can't use it, because come Monday tomorrow, it'll disappear, and then these other ones will be on the top of the list. So this is basically the most active one that's current. So Apple right now is $168.64. We have a call strike price at $175 that expires this Friday, approximately 7 days from last Friday. And so Friday the 18th, we have an open interest of 60,000. We have the volume of 48,000. Now, volume resets itself daily. Volume is buying activity and it's selling activity. Open interest in the options world is an accumulation of the volume. So this amount of volume will then merge itself with the open interest on Monday, because it's showing the overall amount of previous interest from the current trading day. And so, but if we see something like this, so where the volume is 40,000, but the open interest was a lot less, significantly a lot less, 17,000, it is now showing more interest. That means that this is now the majority of buying activity, because with something like this, if you're seeing open interest is higher than the volume, we don't exactly know if this is a majority of selling activity or buying activity. Most likely it could be 50-50. But if we're seeing something where the volume greatly exceeds over the open interest, then we got to consider this unusual amount of a massive amount of buying activity, because it really exceeds over, because it's showing a lot more interest. These investors that are buying into this are very firm that the stock is going to go up either later that current day or the next trading day or next couple trading days. So $172.50 was a very, very popular one going into close on Friday. So the next one is the MGI that is currently at $8.62. We have a call strike price for $9 that also expires this Friday, the 18th. We had an open interest of only 87,000 and the volume of 36,000. So, But again, MGI is not normally on this list. So for it to be on here is definitely considered unusual activity. I just wish there was a little bit more unusual volume activity. So, but we got to do a little more research on why it's even on the list. So the next active one is another Apple, but we have an Apple put, $170, where the open interest was 29,000 and the volume was just under 35,000. So with the combinations of puts and calls, again, we're seeing some straddling activity right there. So we could be seeing a lot of investors that are buying both. So the next one we see Bank of America, BAC, which was on some of our topics this morning during our meeting, talking about the bank season. We're going to see more unusual activity, more buying activity on banks. But for right now, Bank of America seems to be the most popular one because most likely it probably has the more potential for more gains because it's priced pretty low, I would say. But right now, you know, we got a lot of activity on a $50 call strike price that expires this Friday, the 18th. Open interest of only 42,000, the volume of 31,000. So definitely unusual that it's on the list here, but I wish, again, we had a little bit more volume for Friday, but I mean, that's to be expected. Friday is more of a sell-off day. I mean, we got some people that are trying to buy in at these low prices, just in case if Monday doesn't dip any further. Monday definitely has a good chance for, you know, a good recovery for at least Monday morning. And so then we have more puts for Apple, so more straddling activity going on there. And so, and that's a good way we can also look for straddling activity is right over here. Under the options area, we have our straddle and strangle, which are slightly two different things, but this concept is still the same idea where you're betting a stock goes up and you're betting a stock goes down. The only difference between a straddle and a strangle is that the straddle is the same strike price. The strangle are different strike prices. One is a little higher, the one is a little lower. So, but you're still betting that the stock goes up and you're betting the stock goes down. But it's still good to see if we can find any unusual straddling activity, because that's one of the things we got to consider is flying underneath the radar. And one of the things that we want to look for is multiple of the same stocks. So if we can find more of the same stocks, we got to consider that unusual activity. We got to add that to our watch list. And I'll show you. So we'll start from the top. We have OTLY. I have no idea what that is, but we want to see if we can find another one. We don't. So we have another one, AEM. Go down the list, see if there's another one. We don't find one. So check that one off. MO, is there another one? Nope. T, yep. So there's two of them. There's two T's, which is what, AT&T, I think it is. So we can kind of maybe put that on our little watch list for straddling activity. And since we're in short, this is basically short term or for the expiration date, or long term for the expiration date. It's still very important to check all four of them. So we have AT&T is on our list. We have the KMI. If there's no, so that one isn't on there. KO, no. AMC, is there another one? Yep. So there is another AMC. So AMC may produce some, and that's what these are. Is these investors anticipate a big price movement in either direction. And so as long as there's a big price movement in either direction, that's going to be very profitable for the straddling strategy. And so we keep going down the list. There's American Airlines. No, there's only the one. Intel. No. Ford. No. Microsoft. I see two Microsofts. So we got two there. So far we have AT&T. We have Microsoft. And so and then we have Nvidia. So Nvidia, which we have been talking a lot about because they have earnings coming up and they're anticipated to be a big price mover. And so, but we will, as we get closer into earnings, we'll see more unusual activity with Nvidia, I'm sure. So we'll go to the next page with long straddle, and we want to do the same thing. We want to see if we can find any of the same exact stocks. So we'll start from the top, work our way down, and see if we can find multiple of the same stocks. We got Apple here. We got another Apple, Apple, Apple. So we got 4 apples on the first page. So obviously, yeah, a lot of investors are anticipating some good price movements from Apple, which might not be a good sign either, too, because normally you don't see Apple on the unusual straddling list, especially, and if you do, you don't usually see 4 of them. So I think that may also lead to the whole Putin invasion fear. And so because investors don't know which direction, especially over the weekend, they don't know what's going to happen, if there could be, if they come up with some kind of solution and work on peace, or if they decide to invade, investors are straddling. It's a safe, typically it's a very safe strategy. The only time where you can really, where straddling doesn't work out is if you're holding and there's no volatility and it just ranges flat. You could lose due to time decay or depreciation because there's no movement. The time decay is just going to slowly devalue the stock at your stock option as you get closer to the expiration date. Now, these expiration dates is just like like the produce at the store, or items. Everything has an expiration date. The longer that item sits at the grocery store shelf, the more that it devalues, and you'll see maybe a clearance sticker on there. If it goes past the expiration date, they throw it out. It becomes worthless. And so it's the same thing with this. It just, the longer, the more fresh that it is, the more valuable that it is, but the more closer it gets to expiration date, the more that it can expire worthless. So that's why options are not really a long-term thing. When I get in, get out, and repeat the process. And so Apple had really dominated this list. I don't really see any other ones. So we'll go to the third one, the short strangle, and look for the same things. We got a roadblocks there, but do we have any other roadblocks on here? Not yet, but I'm sure as we get through the next week here, we'll probably start seeing more roadblocks, because roadblocks had a good mover on it. Remember, it was like what, 15-20% ish. And so definitely I think we're going to see a lot of straddling on roadblocks this week. But for right now, we just see the one on there, which is kind of a clue, as we know what's scheduled to happen. But we do see another AT&T here and here, so we do see 2 on the list. What else here? AMC, we have a couple AMCs. Down here, so we got what, 4 or 5 of them. AMC's straddling activity. We'll keep going down the list here. I think that's JP Morgan. So we're talking about banks. We were seeing some activity with Bank of America. We're starting to see some activity here with JP Morgan. There's Bank of America there. Going down. Okay, we'll go down to the 4th page here for long strangles. Let's see, do we see any other multiple of the same stock options? Let's see, Moderna, no, it's the one. DraftKings, we were talking about DraftKings because they got earnings. We just see the one there, but we could easily see some unusual straddling activity later this week with DraftKings. Any others? Square, Nvidia, a lot of good names, but I don't really see any multiple of the same stuff yet. So, but we'll definitely have to look at this again on, tomorrow, Monday, throughout the day, and most importantly, right before close, because we want to see, and this stuff will populate every 15 minutes. So you can look at it 15 minutes before close and get a good idea of what people are straddling, and you can easily pick one that may look appealing to you. So, but if we're wanting to get maybe information on a particular stock option, we can always use a website that I use Nasdaq for. Let's say Nvidia. So we can go to Google, type in Nvidia Nasdaq most active. Most active, I think, options. And then that should pull up first page, and then you'll have the most active individual calls and puts for that particular stock option. So we're looking at, unfortunately, in Nasdaq website updated their website about a year ago, but they used to have their expiration dates on here. Now they're not. You actually have to click on them to see what the expiration date is. But sometimes you can get a little clue like what the value is for that particular one. If it's worthless, then obviously it's expired. So with the calls, there's some value here, the $280 call. Let's click on that and see if it's expired or not. So we have February 18th. So today is the 13th again. So this is basically the most active call for Nvidia right now, which is pretty crazy because Nvidia right now is $239.49. They're down a lot. They were just almost $260 before that, and so we're definitely seeing possibly a big jump, maybe a big recovery for Nvidia. Especially for the earnings, anticipated for it to have what was it, 85% expecting an earnings beat and like around a 10% price movement, and that could be what's the word I'm looking for, keeping it light. We could see a 15 or 20% movement on Nvidia. So the $280 one the $280 call strike price looked like that was so far the most active one that's still current. That had about almost just under 23,000 in volume, but had 19,000 in open interest. So definitely. And then we have 260 down over here, and a 270. And then for puts, I mean, there was just a lot of puts for Friday, but again, if we look at this during the trading day, you'll get live information of what's going on. So it's good to watch this during the Monday, Tuesday, and whatnot. That way you can kind of see, it'll clear all this other out, and we'll just see what's current, what's active, and what people are focusing on. Because one of the other things the pro traders will say is follow the money, and that can mean a lot of things. But with something like this, we're seeing where investors are investing their money, rather than asking people hey, I got $1,000, where should I invest it. We can really see where people are investing their thousands of dollars. That way you can kind of follow the same algorithm. And so just very, very good, information. This week looks like it's scheduled to be very volatile. So any questions, anything anybody wanted to go over? You feel free to chat. You can unmute your mic and voice talk or whatever. I'm going to read the chat and see if there's any questions in there.
Carlos, I have a question here regarding this one. So normal trading, not options. Do you recommend or you are expecting Nvidia is going to go up or go down? And what is the percentage either way?
For which one?
For Nvidia. Yeah, for this stock.
Oh, for Nvidia?
Yeah.
Well, there's definitely several things that we want to, look at. We always want to look at, things like this, but also there's also a website we can use. So if we go to Google, we type in Nvidia, we can do CNN forecast to kind of just quickly look at what other analysts believe really quick before we kind of start looking at, I don't know why it's not loading here. Hold on here. Their website may be down, but yeah, sometimes we can get some yeah, that's weird. Yeah, every once in a while their website has some issues, but microchips need rare earth materials, and that's one of the things that they cannot get enough of. So they can easily have, they can produce a massive amount, but if they can't get enough rare earth materials, then they just can't produce enough. And I was very surprised to find out that how many microchips a vehicle needs. Each one of your vehicles uses at least 1,000 microchips. And if you have a loaded vehicle, like like an F-150 Lariat or Platinum or a Cadillac Escalade, those things use like 2,000 microchips. No wonder why there's a shortage on microchips. I mean, the things that we use just consume so many of them. And so, and that's why there's a shortage in vehicles, and as well as everything else. And so we could see Nvidia start to come down a little bit, but then again they've been getting a lot more business with cloud-based servers and stuff, as well as slowly kind of getting in the automotive industry. It was a year or two ago, NIO had announced, as when they revealed their all-electric vehicle that got 500 miles on a full charge. They said that they are partnering up with Nvidia because they're using more graphic microprocessors to process a lot of information for autonomous technology. And one of the things they wanted to go over was the LiDAR radar. It's a laser technology. That way it scans, like, the whole, perimeter of the vehicle, and to be able to process that kind of information, they need like what was it, 4 or 8 Nvidia heavy duty microprocessors and whatnot. I'm like, oh my gosh. So Nvidia still may most likely have a lot of a growth, because there's a lot of companies, more and more companies are partnering up with them. And so I can definitely see a good forecast for Nvidia. I was just hoping that we can kind of back up some of that information up with some of the other analysts, but we can also look at their charts. Let me switch over to Webull really quick. We can kind of look at let me see here. Take a look at Nvidia on the daily graph overall. Yeah, I mean, overall, I mean, it's uptrending. Got a pretty good line here. So it's pretty good overall uptrend. But like I said, if there's shortages, or if we go through this, if we go through a World War III or something, it's going to be a big nightmare for technology. But energy is going to go up very quick. But we have to, but it's we'll have to kind of wait and see what happens. But Nvidia, for the most part, should have a pretty good bright future. Yeah, I mean, the highs was recently 333. It's down to about 229. But like I said, that's because we're in the bearish season, and where a lot of stocks will fall, just like what it's doing. This is a perfectly normal situation, and then it will bounce off and recover, just like all the other previous first quarters. So no, Nvidia is a good, long term, but AMD, however, may be have more potential for better gains. AMD is very similar microprocessor, but it's a lot more affordable. And especially with the way inflation's going and everything, businesses and consumers may be focusing more on a more budget processor for almost the same quality. And so like I said, AMD may be more something that I think investors will be keeping a closer eye on. And it's been more on the active list than Nvidia has. And so but both of them do seem very priced pretty low. I'm still reading through the chat room here. Let's see if I wish to listen to you. I wish I would have listened to you and sold everything last year and take sort of, yeah. Yeah. People that listen to me make a lot of money and they can save a lot of money. So that's why it's important we go over meetings and we kind of go over things because it's important that you understand everything. If you don't understand something, just say it. That way, we can try to talk about it until you can understand. Because the more you learn, the more you're going to earn, and that's why it's important. How do you get to the calendar again? Okay, let's go back to the web browser. And so where was that? Okay. So the calendar, you go
صح لازم انت ترن ليفت.
if you go to
لا على طول خليك على طول.
If you go to Google, type in Nasdaq stock market calendar, probably let's do PDF because that'll pull it up to the top. So Nasdaq stock market calendar PDF, and then boom, you got right there your 2022. Again, this is really, really important because we always got to be planning ahead, whether it's the next following week or next month or next several months, next quarter. And so let's go back to the options. Since we're planning ahead, let's plan ahead even further. So how can we get that kind of information from options? And I'll show you. Let's go back to the options volume leaders. So again, this page will show you the most active individual calls and puts, but it always sorts it out by volume. In volume, which is good. That's what we normally want to see. But now for the long run, we want to see it under open interest. Now, obviously, the bar chart website wants to sell you their service here, but it's free. But if I click on open interest, it only sorted out with the information that's currently on the page. But however, if I click refresh on the browser, it'll know to keep the open interest, but to sort out the entire list. Now it's showing 180,000 in open interest. So this is now showing more longer term stock options. We see a year from now, January 20th, 2023. We even see 2 years from now, a stock option that expires in 707 days, January 19th of 2024. Look at that. American Airlines, which is currently at $17.61 with a put strike price of $5. What in the world is going on here? There's a lot of interest on there. Why do investors anticipate that American Airlines is going to plunge to $5? That is scary. In a matter of 2 years, what in the world? Anyways, so Nokia obviously dominates the top of the list for open interest. Nokia is currently at $5.54 per share. We have a strike price at $10. Even if you're not into options, this is still great information because you're seeing where people are betting the stock is going to reach. So this is now like a target, a price target. Even if you buy Nokia at $5.54 a share, and if it reaches $10 a share, you still gain like 90% in 1 year. That is a great amount of gains if you're a long-term or short-term investor. So the options activity can still be in your favor, even if you're not an options trader. And this is where it can be very, very valuable information. So let's keep kind of going down and see what else we see. Bank of America, $50, not a very big, gap between the two. We have Sundial down at $66. We have a $1 anticipating it'll get to $1. If the government ever decides to legalize cannabis throughout the United States, cannabis stocks are going to surge like crazy. But once cannabis is legalized throughout the country, cannabis stocks are going to plunge. I watched it happen through Canada. It was amazing. But I didn't know that it was going to plunge because I watched the cannabis industry flooded itself because it became legal. Everybody was doing it. Everybody was trying to grow it. Everybody was trying to sell it. Everybody was trying to buy it. And so it made it tough for the growers. It made it tough for the retailers because the market flooded. Because, you know, when you have a lot of something, you know, the market or the value depreciates. And that's why right now we're in a shortage. Short supply, high demand. High supply, you know, you just have a low demand, or, you know, and so just know that eventually we are going to get in this cannabis hype and whatnot. It's just a matter of, it's not a matter of if, but when. But Sundial and many other, you know, like Tilray and Kronos Group, you know, they're all going to do very, very well up until they legalize. Then the whole thing's going to surge because, remember, buy on rumors, sell on news. You know, the more information that we know, just like the Wall Street investors, we can synchronize the same activity because they're doing it and we're doing it. We're all doing it at the same time. And it just creates more volatility. So some other big distances. So we have Ford, we have which is Ford Motor Company is down to $17.55. We have a $20 call strike price. We have another one here, and we have a $30 call strike price for Ford Motor Company. Even if you bought it at $17.55, that's like an 80% gain just from shares. And if they are paying dividends, not only are you holding an appreciating asset, but they're paying you a dividend every 3 months. So, but a lot of investors believe, especially, so keep in mind, the F-150 Lightning is being manufactured right now. The F-150 Lightning, which is Ford's all-electric pickup truck, which is an amazing pickup truck. I got to drive it last fall. It is amazing. You're going to love it. It is, and with that being available to Ford dealerships very soon, we'll probably start seeing it around April. They're going to be demo models, demonstration models, allowing you to go to the dealership. You can touch it, you can feel it, you can hear it, you can drive it. That way you can see what you're expected to, because maybe you had ordered one or reserved one. You can now see what to expect, or maybe you haven't yet. Maybe you wanted to wait. Maybe you're one of those 30% of Americans that have to touch, feel it, and drive it before you buy it or order one. And so once that it becomes available, it's going to be more on the news. We're going to see Ford's stock even go to, you know, back to 20, 25. We'll easily see it back at $30. And then Ford will easily manipulate their numbers, their earning numbers again with all these online orders and stuff. Because Ford had really watched Elon Musk with Tesla over the years on how Elon Musk has been able to manipulate his numbers and to cause his share price to appreciate greatly over every quarter. And so Ford is really following these breadcrumbs. So it's Ford Motor Company is a great one to invest in, whether it be short term, long term. And they're building some new factories and stuff. And we know what that's done for Elon Musk with Tesla. Every time they build a new factory, it seems like double his share price. And so Ford is building one or two new factories around the country. So we're definitely going to see a lot more long-term activity for Ford Motor Company. And so these are just really great tips and tricks. Just depends on your style investing and trading. Let me see if there's any other questions or comments in the chat room here in our Zoom meeting. Let's see, I need help. So I need help with setting straddling, Monty said. So straddling is really something you buy your calls and puts separately. There's no option really. You just click on straddle and it just buys it for you. You have to pick your strike price and your dates. Now, when it comes to straddling, you always want to use the closest expiration date. And the reason why that is because if you pick the closest expiration date, that means your stock options will be more volatile, which is what you want. You want big movements in either direction. And because if you pick a longer expiration date, there's going to be less volatility, less movement. So you always want to pick the soonest expiration date. And then try to pick, if it's in the money, uh, you know, and because if it's too far out from the share price, and if it just doesn't move or touch that, you're going to suffer from time depreciation and time decay. And you don't want that. You want at least one of them to be in the money if there is some kind of movement, because if it is, it's going to create some good value and less time decay. Somebody else says need videos on straddle or examples, still new with this and options. So let me go into my Webull. Now, the Robinhood app is a very user-friendly app. Unlike a lot of other applications that can be very technically advanced. But if we go to the options section of the Webull app, now Webull is an application you can download to your desktop or laptop, tablet, your phone. But when we go to the options, and again, we're still on Nvidia, and so we're on the expiration for the 18th, because the 11th is expired, so they're not showing any expired information. Otherwise, we'd see a lot more huge swings. However, with Nvidia being down only 7%, you would have lost about 50% of the calls, but your puts, look at the gains on the puts. You're at 148%, 150%, basically, so that 150% gain washes out your 50% loss, and it puts you ahead. So you see where I'm saying you can only lose what you put on one side, but your gains are potentially unlimited on the other side. Why wouldn't you straddle if it's such a very safe strategy when done properly? Because we're looking for big movements, which is what we've been talking about. We can see what big movements that are scheduled to happen for this week, and that's why we got to put a lot of these stocks on our watch list. That have earnings or activity that we can find using the bar chart website. So hopefully this makes more sense when it comes to straddling. Like I said, you betting one side, one goes up, other side goes down. So hopefully that makes sense. If it doesn't make sense, definitely let me know. That way we can try to get it so that way it does make sense. Because if it don't make dollars, it don't make sense. This makes a lot of sense. Let me read down the list here, see if there's any other questions. I have a put on Mara for $23. How can I tell if it's going to be bearish or bullish for this week? And so, but a lot of times as we're going over economic reports and whatnot, a lot of stocks will follow those bearish or bullish characteristics. So if there's nothing really scheduled to happen for Mara, then we want to try to focus on those economic reports and other activity that's scheduled to happen. But so let's see what Samara, it must be this Marathon Digital Holdings, I'm assuming. This is for Christy. So let's take a look. So we're looking at the daily chart here. We can see that the Mara has downtrend basically since November, and it's been downtrending ever since. However, Mara looks like it has provided a recent buy signal. We see that the price line has cut through all three moving average lines, and the moving average lines has crossed over each other. They're reversed, they're inverted, and that is our buy signal right here. So Mara basically has provided the buy signal around $26. It's right now down to about $27, but this is our buying area, our buying signal. This is what we're looking for. The MACD had provided us some signals. Hey, maybe getting close to a good buying signal pretty soon, and it did in the last week. And so typically when you see something like this, for the next couple of weeks or maybe the month, we could see it kind of fumbling around, but it's saying it's ready to uptrend at any moment. So that looks like a good one. And then you said I have a put for 23. So you're betting against it when the charts are trying to tell us that it wants to go up. So let's, again, we need all the pieces of the puzzle to make a clear and more an informative, intelligent buying and selling decision. So now we need to go back to that Nasdaq website to see what investors are doing. What are they buying? Are they betting against it, or they're betting it's going to go up? And so all we got to do is we change the ticker name in the URL address of the Nasdaq website. So if you bookmark this link, that's good, because the only thing you got to do is change the ticker right there, and the whole page will change to focus on that particular stock option. So we have the most active calls for Mara and the most active puts for Mara. So, but again, we need, a lot of these may be expired. So we have a lot of calls here that look like they're expired. We have a lot of puts here, so we need to see if these are expired or not. Now, you mentioned you had the $23 put, which is definitely not on this list. So because your $23 put strike price may have a low amount of open interest or a low amount of volume, you may expect some extra time decay and time depreciation because there's not a whole lot of activity on it. And your $23 put strike price is too far away from the current the current value of the strike price. So if we're trying to focus on some math here, $27 versus $23, what percentage of a difference would it take to get there? 6%, 6.5% only moved it at 2% or $2, if that. And so you would need probably what, 20% or gosh, 20, no, you would need probably what, like, yeah, 20% drop. And so the system is going to say, because you would need, it's a 20% difference from $27 to $23. That's where you're going to see extra time depreciation, time depreciation and time decay, because the system doesn't think or it doesn't think or believe that it's ever going to reach that, because investors definitely don't. So definitely proceed with caution with that $23 strike price, because you may need to readjust. If you feel that Mara is going to go down, try to get it within the money, just like all these other guys are doing. Yeah, we may see a $20 put strike price here. Let's check the expiration, because this expiration date may be way out there. I'm not sure what your expiration date is, but we have at least March 18th. So as long as we have a longer expiration date, it's not going, the time depreciation isn't going to eat it up as quickly as most of these other ones are probably most likely going to do. But we do see a $20 put strike price in there. Not a whole lot of volume activity for Friday, but we are seeing a good accumulation of open interest. And so people are buying this particular one and they're holding on to it. So if you're going to bet against it, you may want to do what the majority are doing, and they're buying the $20 one. So as long as they're doing that, at least they'll hold and maintain the value. We won't see a lot of time depreciation on it, because it holds a lot of value, as well as it has a longer expiration date. And this is the price per share. So if you do, each contract is obviously 100 shares, but at a fraction of the cost. This would be $131 per contract. And so this contract was up 39%, because the stock had went down 6.5% last Friday. And so this is just something you want to see, make sure, just to kind of confirm, am I making the right choice? What are other people doing, kind of thing. But you just want to kind of, put some things together. But like I said, that graph, is showing that it could easily uptrend really, really soon. So just proceed with caution on that one. Let me see, any other comments, questions in the chat room here? So is it better to look at the numbers on open interest or volume? It's good to pay attention on both, because again, volume is today's current buying and selling activity. Open interest is accumulation of the volume activity prior of the current trading days, from basically when that particular stock option had existed, is that way it kind of accumulates it over that time. And so it's just good to know, because if we see again the volume is higher than the open interest, it's just showing more interest, more desire for that, because investors are betting that they're pretty certain that it's going to go in that direction. Let's see, what if change percentage in the option chain? How can we use it to help make decisions? So the change is just basically the change in the price change of that particular option, that stock option, that individual call or the put. Just like when we went to the Webull, where we're looking at both sides, it's just very similar to this, where we can see the change for that particular day. But like I said, every day it'll reset. But you don't really use it to really figure out if that's something you want to get into or not. It's mostly the volume and open interest and the patterns and the algorithm using your moving averages. Because the moving averages was really your foundation. Let's go back to that. And it's definitely something that we talk about from time to time. This is your assistant. It's telling you whether it's downtrending or uptrending, when to buy, when to sell. And so on Mara, it told us to sell right here when it was at $57. And it's telling us now to buy. Or it will be, throughout, for the next month, because now that you're educated on the seasons of the year, now that the second quarter or the springtime is our transition from going bearish to bullish. So we're going to soon we're going to see a lot more stocks doing the same signal right here. This is our early buy signal. We may not, well, that's Facebook there, but like I said, it's still a little premature to see that in a lot of things right now. We'll look at SPY. Let me remove that. But here, like I said, in March, we'll see more stocks doing what Mara kind of looks like right now. But like I said, right now, most stocks are just kind of in the middle. But once we start seeing this is like, okay, it's time to buy. And utilizing your daily graph, this could be your, for your short-term, long-term stuff. But for day traders, you always want to use your 1 minute and your 5 minute chart. Because, with your 1 minute chart, then that with volatile times, we know when things happen. And so as well as economic reports, because when economic reports come out, then that's when we know that trending directions can easily change. So we got to be aware of that. But to smooth things out, you can always go to your 5 minute chart. And that's where you can see a little less signals and a little smoother algorithm. Let's see, change. I'm going to continue reading the chat. Anybody else have any questions or comments? Everything makes sense? Somebody also mentioned Moderna. Let's take a look at Moderna. That's right. That's right. Let's go to daily. Now, keep in mind that nobody likes getting vaccinated. It's hard to, even though the media keeps pushing this whole COVID vaccine, it's not really a vaccine. It's a flu shot is what it really is. And this has just been a big, massive sales campaign. Whether they promote, free testing kits, blah, blah, blah. It's not free. Taxpayers are paying for it. And so it's just a big marketing thing. And so but the hype is over, and people that did get their shots got it, and as well as boosters. But there's just been so many complications that now people that won't even get a booster anymore. And so, but and that's why Pfizer's trying to work on a pill, because they're trying to make it seem like, oh, it's a lot less risk, blah blah blah, or whatever. It's easier, you don't have to get jabbed. And so, but people are fed up with this, and so there's really not a market for this stuff anymore, for the COVID jabs. And so they're going to easily have a loss of revenue. So puts would probably be more ideal, but with Moderna is really has fallen a lot. I mean, they're pretty down there. Not sure how much lower that they're going to go. But so far, we easily see that they're downtrending. It has not provided a buying signal yet, or an uptrend direction. Still going down until further notice. But we can also see what other people are doing. So let's go back to the Nasdaq website. What was that? It was mRNA. All right, so now we'll take a look at the most active individual calls and puts for Moderna. And so we have the most active calls, most active puts. These are pretty much expired. This one may have, so Moderna again is $161. We may have a, let me see what this is here, $230 call. Okay, that expires this. That is a huge difference. $230 call. It was up 116% based on a 0.5% movement. That is weird. What is going on here? So we'll kind of have to take a look at that. It's not worth a whole lot. 13 cents per share times 100, so it's a $13 stock option. We have some other ones here. $185 call. Let's make sure if that one's not expired. So that one's still current up until this Friday. But let's take a look at some puts, because there's definitely a lot more, I think, interest on the puts recently, based on the volume, which will then merge itself with the open interest. We have a $165 put. Again, it's about 161, so this one's already in the money. That one has expired. Look at that $120 put. Let's click on that one, see if that one is to March 18th. Wow, $120 put. So that's so we have a just under 2,000 open interest, about 1,100 in volume. So yeah, a lot more longer. Yeah. So it just looks like Moderna can easily potentially keep going down for several reasons, mostly because it's the bearish season. People aren't using their products anymore. Yeah, it's just not looking good for that company, and we could still continue to see a downtrend. So I'm going to keep reading your comments here in the chat room here. What are your moving averages set? So my moving averages are set because I'm very fluent in a lot of different strategies, but I primarily specialize in day trading and swing trading. And so my moving averages are set for EMA, because EMA reacts quicker to price changes. And when you're a day trader or a swing trader, you want that. You want more of a reaction to price changes so you can react sooner. Now, if you're not a day trader or swing trader, you're going to want probably the simple moving average or the regular moving average, because it's not going to move as reactive to the price changes, not giving you as many buying and selling signals. And that's, and as a long-term investor or short-term investor, you don't want that many buying and selling signals anyways, because then that may be considered a false signal, because it may have provided you a quick sell signal and then easily recovered, and then provided another buying signal, and you may have sold and didn't buy, and now you're frustrated. And so that's why you want to configure your moving averages accordingly to your preference in your style in trading and investing. You also mentioned, can you trade Forex on Webull? No, cryptocurrency you can, but I'm not aware you can do Forex. One of you guys said, what are your thoughts on Roku for earnings? And that was another thing that we had mentioned as we go back to our website. Maybe you got here a little late. That's okay. All the earnings stuff that I always post and have been since I created the group about 4 or 5 years ago will be saved in our featured announcements area. So Roku, that's scheduled to release their earnings on Thursday after the stock market closes. And then I post the top 10s analysis in here. We can see that Roku is company is earnings release has a 69% expecting an earnings beats. However, option traders are pricing in around 15 to a 16% price movement in either direction, which again, that is a perfect for what we want for straddling. Because, and look at this, if we go back to let's say Nvidia again, Nvidia that had moved what, like 7% on 7% on Friday, just from that 7% had a movement or a gain of 150%. And again, this was a much longer expiration date. Let's go back to the web browser. We'll go back to and I'll show you what Nvidia actually did. Look at these puts. These puts gained 800, 900% on a 7% movement on that stock. I mean, that is huge gains. And so if we are expecting a huge movement, 15%, we could easily achieve these types of gains on one or the other. And that's why it's important that to straddle, because that way we can have our cake and we can eat it too. You know, it's a lower risk strategy. That way we're more likely that this is going to be in our favor. Because manipulation, we saw what manipulation did last week with a firm. A firm, I think, had like a 60 some percent expecting an earnings beat, but they had like a 20-30% price movement in either direction. And the day before, or the current day of when a firm did their, let's see the Webull really quick. Let's go back here. Oh, wait. Yeah, it was nuts what happened that day. Yeah, right here, Thursday. Yeah, firm was up. It was doing good. It was up like 4 or 5% early in the morning, and then it was up 10%. There was some weird leak of what was on their Twitter account that they had released their earnings for like a minute, and people ended up catching it. They started posting it, and then all of a sudden people started to buy, and up here it was like 5%, and all of a sudden went to 10%, and then moments later it just plunged. And this is what we call falling knives, which you never really want to catch until things really start to calm down. But it had plunged like what, 20-30%, which was anticipated to happen in either direction. It just wasn't expected to reach, because overall, I mean, I think it was down like 30-40%. And so, but we did anticipate from our last meeting that this was going to be a big mover in either direction. And so we're going to see the same thing happen this week, but
but like I said, manipulation and other glitches and weird things can happen anytime. I don't know if you saw, but this happened so quickly, so fast that it halted like 2 or 3 times. I mean, it was nuts. I think it halted here for like 5 minutes, and then it opened up, and then boom, just fell right back down. And obviously, that means that they're not going to beat their earnings. And at that point, you have but that's why you want to straddle, through these types of these scenarios, because because at first you had a bunch of calls that made a lot of money, and then your puts, you would have lost a lot of money on those, but your calls would have outweighed the loss. But then as it plunged, now your calls are at a loss and your puts are at a huge gain. And but a lot of people are still buying calls right before close, but the gains will easily outweigh the loss, hoping that there was a little bit of a recovery, but there never was. As we go into Friday was just had a massive sell-off with the scare, because Vladimir Putin had a big talk with the world that morning, and it scared the heck out of everybody. And I don't know if you guys watched the video, but he said, "Let this be clear." He was almost like, "This is my final video to the world. Basically, this is going to happen with that he is going to invade Ukraine," and that he goes, "Don't nobody mess with our with what we're going to do, and if you do, nobody's going to win." He said that, and basically that means nobody's going to win. It means like a nuclear fallout. It was but maybe he said this before, I don't know, but I mean, this is serious stuff. You just don't say things like that. Just like the president of China said, bashing anybody mess with them, they're going to bash their bloody head on their steel wall or whatever. You just don't say things like that. These guys are crazy. So it's hard to say whether they're just full of piss and vinegar, or if they're actually going to do what they're going to say that they're going to do. But however, Putin seemed very serious with this video, so we got to really proceed with caution for this week. And I highly recommend, let's straddle, stay safe, make good choices. And so that's my thoughts. Any other questions? Anything else anybody wanted to go over? Somebody said how to read the moving average between 1, 5, 15, 30 minutes charts. Yeah, usually if you're day trading, the first opening or pre-market, use the 1-minute chart. The first hour and the last hour are the most volatile times of the day. So that's usually when you want to use the 1 minute. When things start to kind of mellow out, then you can switch to the 5-minute chart. You could do 15, 30-minute chart depending on the stock. Usually 15, 30 minutes or stocks you're looking at that have very low volume and barely move. But if you're looking at big mover, a lot of volatility, you definitely want to use the 1 and 5-minute charts, especially maybe side by side. Other than Facebook, do you have a Discord or YouTube channel I can follow on a daily basis? Yes, we have both our Facebook Messenger chat rooms that I'm most active in. We do have a Discord group that my other admins are in, but I'm not active in it. I like the Facebook Messenger chat rooms because it's more user friendly. It's tied into the group. So if there's ever a scammer that comes into our chat room, if I remove them from the group, they automatically get removed from the chat room. So the whole thing's kind of tied in together. Plus, it's the Facebook Messenger is more user friendly for everybody at all ages. Discord may seem a little overwhelming even for those that might not be very computer savvy, where Messenger is very savvy for those that aren't very computer illiterate. So that's why I like Facebook Messenger, because it's more user friendly. We do have a YouTube channel. This is a recorded meeting, so I will be posting it in our YouTube channel for our reference. If you got here late, you can always rewatch it or share it, or a lot of times you can, at the end of the week, you can rewatch it just to see how accurate that it is. And all the information that we go over, especially with all the economic reports and everything that's scheduled, usually has over an 80 to sometimes a 90% accuracy. things unexpectedly do happen due to manipulation or other events that happen around internationally. But like I said, 80%, that's really, really good. And that's why we do these meetings, just to make sure we don't miss anything. Anything else? All right, guys. Well, thank you very much for attending our 2-hour meeting. Again, I will post this in our YouTube and our Facebook. In the meantime, I will be standing by. If you guys ever have any questions, feel free to give me a message on Facebook Messenger. My goal is your success. I will be available 24/7. And so I will see you guys then, and we'll also do a live pre-market trading. That way, if you want to see, how we can kind of look and watch for pre-market activity, and we'll also try to do a power hour tomorrow, so that way you can kind of watch and observe and look, or what to watch for, to look for, and things like that. So it'd be good to participate. So same link, and I'll post that again in our little chat rooms and stuff for your reference. But thank you guys very much. Stay safe. Have a good weekend, and we'll see you soon.